you can never ever sell experience and the grind that comes with it, whether it's in trading or in any other field. But since most new traders want a quick fix and they want to get to the profits as fast as possible, trading psychology has all of a sudden become this secret sauce to become consistently profitable in a short space of time. Don't get me wrong, trading psychology is important because trading psychology is basically the mindset you need to have to be able to take trades in the market without the fear of taking a loss or without having any expectations. Losses are a part and parcel of trading. And when you are trading and you've traded for quite a while, then you know that definitely there are periods in your trading strategy where you go through a series of consecutive losses. And the challenge when you're trading in the live markets is that, let's say you've taken the first trade and it's a loss. You've taken the second trade, it's a loss. You've taken the third trade and it's a loss. When it comes to taking that fourth trade, it becomes so emotionally challenging because you automatically start having fear, because with those three trades, you've lost money and you've lost a certain portion of your trading capital. So in this video, I want to show you what you should do instead of focusing on trading psychology to be able to trade the markets without the fear of taking losses, because you will never hit consistency until you get to the point where you can just take trades in the market without fearing what's going to happen next or having expectations on what's going to happen next. So without further ado, let's get right into it. Now, what I'm looking at right now is my backtested data, and I'm going to go over my backtested data for 2024, for 2023, and for 2019 to show you exactly what you need to focus on so that you can hit that flow state that I'm talking about and be able to take trades in the market without fear or having expectations. So what I want to focus on is on the win rate. I'm also going to focus on the maximum drawdown, the monthly performance, the ratio between high probability trades and the valid trades, and also on the equity curve so that I can bring the point home. Before you can be able to even get to a point where you can collect data like this, you need to backtest, and this is going to take you a lot of time. And before I even got to the point where I could collect data like this, it was a few years after starting backtesting and forward testing, meaning that I was backtesting and then I was trying to implement what I've learned in the backtesting session in the live markets, see what works and what doesn't work, make iterations until I've gotten to a point where I exactly know what I'm looking for when I'm backtesting. And so I'm not just backtesting aimlessly, I'm backtesting with the aim of taking high probability setups. And after backtesting, I'm transferring the trades that I've taken into this spreadsheet, which now helps me to aggregate all the trades that I've taken and come up with all the data that you're seeing in front of you right now. The first thing I want to look at is the win rate, because for you to be able to trade the markets, you need to understand what your win rate is for your trading strategy and what your loss rate is. So when you look at this particular year, I had a win rate of 37.5%. I had a return on investment of about 78.37%, which was very impressive, considering that for this particular data, it's only for indices and metals. You have the US 30, gold, DAX, palladium, oil, and the JP225, as well as the NAS 100. So this is data for about 7 pairs, which are the metals and indices that I trade. Your win rate and your loss rate is going to vary depending on the market conditions for that particular year. But basically for me, my win rate is around an average of 30%. Because when you look even at the 2023 backtesting data for the metals and indices, you can see that I had a win rate of 27.25%, and for 2019 I had a win rate of 25.21%. So if you average the three of them, you come to an average of around 30%. Now people think that you need to have a high win rate for you to be able to make profits in the market, but that is not necessarily the case, because you can have a low win rate but you can have a high risk to reward ratio, meaning that For every 1%, let's say you're risking in the market, maybe you can be making 5%. So even if you take more losses than the amount of wins that you take, you are still going to end up profitable. And as you can see, for this particular year, even though I had a win rate of just 25.21%, I had a return on investment of about 131%. Now, this is on currencies only, and as I've said, the market conditions for each year are going to be different, and they're going to determine the performance of your strategy. Now, let's even forget about the currencies. Let's just focus on these two for the indices and metals only. You can see that in 2023, I had a win rate of 27.27%, but I had a return on investment of 23.76% for the entire year. And when you look at 2024, you can see that I had a win rate of 37.5%, but I had a return on investment of 78.37%. Now, when it comes to this win rate and loss rate, it just means, let's say, for example, I take 10 trades. Now, if I have a win rate of about 30%, it means that for every 10 trades that I take, I might get 7 losses and I might just get 3 wins. If you have that data with you, then it makes it easier to deal with losses, because when you get into a sequence of losses, you understand that, you know what, my win rate is at 30%. So out of every, let's say, 20 trades I'm taking, I'm only expecting to get a win on maybe 6 trades, and 14 trades will be losses. Once you've gotten this in your mind, it will be very easy for you to take trades even after you've taken a consecutive number of losses. Let me go and show you the maximum drawdown for all these 3 years, just to show you that losses are a part and parcel of trading, and being able to know what your maximum drawdown is very, very important, especially to help you deal with consecutive losses. Like I've talked about, once you've taken 3 trades, you'll buy, and they're all losses, you might be afraid to take the next trade. But if you understand your maximum drawdown, it's easier for you to take trades, and this is what I'm talking about. For this particular year, 2024, which was a very good year for this strategy on the metals and indices, you can see that my consecutive losses was about negative 3.58%, meaning that maybe I took 4 trades in a row which were losses. But when you look at 2023 data, you realize that the consecutive losses have jumped a little bit higher to negative 9.4%. So it's very likely that I took 10 losses in a row in this particular year at a particular period of time. Now, this is completely okay. And when I look at 2019 data, you can see that the consecutive losses were 9%, meaning that I took 9 consecutive losses in a row. Now, once you have this particular data, if you even take 3 or 4 losses in a row, you know that it's very normal and there's no need to panic. So you just take trades without having any fear, as long as they are high probability setups. Now, let me go and look at the equity curve so that we can be able to look at these consecutive losses and how your equity curve is going to look at the end of the year. Now, for this 2024, you can see that this equity curve, and this is what an equity curve, a healthy equity curve should look like. Like there's never a single point in time where you just get an equity curve that just goes upwards continuously. This is what it should look like in a good year, where you get the market in your favor. You can see that we started with a very small drawdown, then we started pushing upwards, then we went to this period of losses, and as I've said, I took a maximum of 4 losses in this particular year. Then you got another push to the upside, and when you can see this, when you see that in spite of taking so many losses here, with one trade my equity goes higher, and that is because I have a high risk to reward ratio. So you can see that after that jump, we then got a period of losses, then we got a winning trades which pushed my equity higher. We got some few losses, we pushed a little bit higher, then we got some consecutive losses towards the end of the year. Now, when you look at 2023, this becomes very, very different, because this was a very challenging year for this strategy. But as you can see, in spite of taking all these losses at the start, and this was just about 10 or 12 trades in a row, which were losses. But basically what I do is I usually risk only 1% per trade. That is very important for you to be able to handle losses in the market. If you are risking even 2% in your trading strategy, and you get into a period where you take these consecutive losses, like these were 12 consecutive losses. If you are risking 2%, then you'll be down negative 24%, and that brings a lot of emotional distress when you're trading. So just stick to risking 1%. But as you can see, for this particular year, we took 10 consecutive losses at the start of the year, of 12, and I was down around negative 9 point something percent, negative 11% before we started getting the wins. And as you can see, towards the later half of the year, the strategy started performing very well, and we ended up finishing above 20%. For this year, we ended up with 23%, I think. So you can see that losses are part and parcel of trading. And even when you look at the 2019 data, you can see like we go through a period of losses, we push, period of losses, we push, a period of consecutive losses, we push higher, a period of consecutive losses. Like, this is what a normal or a healthy equity curve should look like. Typically looks like how a trending market looks like, with an impulse, a correction, an impulse, a correction, because markets go through different phases. And as you can see, even though I'm taking a consecutive losses, it does not make my equity curve to move like in a zigzag manner, because the losses are mitigated at a maximum of 1%. But with the wins, I can even make, for this particular strategy, even make 15 risk to reward on certain trades. So normally I have a very high risk to reward ratio, which now helps to cover for all the consecutive losses I take. Now, this is a very important part of trading. When you look at the equity curve, this is going to be very important, especially when you're looking for outside capital or investor capital, because no one wants to be in a situation where their capital goes into very deep negative drawdowns. It should look like this: moving upwards, a little bit of drawdown, pushing upwards, a little bit of drawdown, pushing upwards, a little bit of drawdown. At the end of the year, you end up with a positive ROI. Now, I want us to look at the monthly performance, because most traders usually think that every month you're going to be making profits in the market, and that's not the case. In every year, things are different, and every month, things are different. You can even go through a period of 3 months without making anything in the market. So you need to be aware of this. So let's just look at the performance of this trading strategy in 2024. So you can see in Jan we had a 9.21%, in Feb 15, in March 14%. Now these were very good returns now these were very good returns at the start of the year. But you can see that in April, a negative 1.45%. In May, we had a 12.85%. In June, we had a negative 0.55%. But generally, when you look at this first half of the year, almost all the months were profitable. But now let's look at the second half of the year. We had only 2 profitable months, in July and in October. In December, November, September, and August, I would have finished without any returns in the market. And you can see that even though this was a very profitable year, you can see that the second half of the year we had so many months which were not profitable. And if you are depending on your trading profits to pay your bills, then this period where you're going through a certain stage where you're not making any returns on the market on a monthly basis, it adds even more pressure for you, because you want to perform. And that is the point where you get traders trying to force trades. Now, this was a very good year for the metals and indices. But let's even look at 2023, because 2023, even trading in the live market was quite challenging, and I'm going to show you in a few. But let us look at the monthly performance for this particular strategy for that year, you can see that in Jan, we had negative 2.16%. In Feb, we had negative 1.54%. Now, imagine trading for 2 months without making any profits. And that's what you depend on to pay your bills. It becomes very stressful. But if you knew already that trading profits are very inconsistent, then you'll be able to just trade without any fear. And as a result, in March, you will be able to close the month with 17.7%. But in April, we had 1.56%, which is just a slight profit. In May, negative 0.91%. June, negative 1%. July, negative 1.9%. But in October, we made 8.78%. In November, negative 1%. And in December, we made 4.41%. So it's also important to notice that the months which I'm finishing in drawdown, I'm finishing with negative. It's not that deep of a drawdown. It's just negative 1.5, sometimes negative 3, negative 4. So it's something that you can mitigate. And this is because I'm managing my risk effectively and I'm only risking 1% per trade. Once you've understood that trading profits are very random and very inconsistent, then it becomes easier for you to trade the market without any expectations, because expectations are the one thing that will put so much pressure on your trading strategy. And when you're not getting the returns that you are expecting, you end up forcing trades, and that pulls you even deeper into drawdown, and it becomes very, very difficult for you to finish the year being profitable. What you're also going to look at here is the ratio of high probability to valid trades. Now, it is very important for you to focus on taking only high probability setups. And what the sweet spot for me is usually a ratio of about 80% to 20%, meaning that you are taking 80%, meaning that 80% of the trades you are taking are high probability setups, and maybe 20% are valid trades. With valid trades, I mean that maybe there's one or two things that might have been off with that trade, but you still took the trade. Now, when you look at 2023, you can see my high probability was at 90.91%. In 2024, it was at 70%. And when you look at the 2019 data, you can see that I had a probability strike rate of 91.6%. So this means that I'm only taking high probability trades in the market most of the time. And this is why you can see that at the end of the year, in spite of taking losses, I still end up with a positive return on investment, which is very important, especially when you're handling investor capital. And so right now, I just want to go through some trading stats from 2023, live market performance, because it's important for you to see that trading the market looks like in terms of monthly performance, because as I've said, the trading profits are very inconsistent or very irregular. You cannot predict which month is going to be profitable and which is not. So basically, these are my trading stats for 2023, the latter half of 2023. And at this time, I was only trading, I think, 4 pairs, and they were all currencies. And as you can see, for July, we finished slightly in profit at plus 1.54. In August, it was negative 2.48%. In September, it was basically at break even. In October, I had a positive 5.42%, but in November, it dipped again with negative 3.06%, and in December, it was down negative 1.77%. So basically, the latter half of 2023, I ended up with being just about 1% in profit. And at this time, I was not even collecting the data that I've just shown you. I was still trading only 4 pairs. I was not trading any indices or metals. And after going through this tough patch is when I now started making amends. As I've said, you back test, you trade in the live, then you forward test by trading live in the markets. You learn what works and what doesn't work. You make changes. If you need to add other pairs, then you add other pairs to your trading strategy. But trading is generally a continuous learning process. You'll be making changes to your trading strategy as the years go by, because the markets are dynamic. They do not repeat themselves the same way all the time. In one year you might get different market conditions, in the next you're going to get different market conditions. And just being able to make slight changes, you do not need to jump from one strategy to another. You just need to make minor changes. Like as I've shown you, even in 2023, the markets were very difficult to trade, and you can even see from the indices that I was trading that it was very difficult. But as you can see, like I've shown you that the last half of that year, I finished just maybe slightly above break even. But if I have been trading indices, you can see that in that last half of the year, I could have added at least 10% to my return on investment for that particular year. And that is why I insist that you should diversify the assets that you're trading. Don't just focus on currencies. Also try your trading strategy on metals and on indices and on other pairs. Now it takes years and a lot of practice to be able to get to this point where you're able to backtest, collect data, go and test it out in the live markets, make changes, come and backtest until you get to a point where your strategy is consistently profitable regardless of the market conditions. Because as I've shown you, in other years the market conditions are good, in other years they're not that good. But if you're trading different pairs and different asset classes, then it makes it easier for you to have a positive return on investment every year regardless of the market conditions. Now that is why at the start of the video I told you that you can never buy experience and the grind that comes with developing a profitable trading strategy. These are things that just have to take time, and you have to put in the work by backtesting, forward testing, making amendments, going deep into the data to be able to find out what is your win rate, what is your strike rate, what is your maximum drawdown. This has taken me years to develop this trading strategy and to be able to collect data in this manner and be able to interpret what I'm seeing in terms of the win rate, the loss rate, my maximum drawdown, what my equity curve looks like all these things that you'll just learn through live market experience and a lot of backtesting and forward testing. But when you have a handle on all these things, when you know what your win rate is, when you know what your loss rate is, when you know what your maximum drawdown is, it will be easier for you to be able to handle the losses in the market. Because as you have seen, not every month is going to be profitable. You can go through a period where you go through 3 months without taking any profits in the market. And these are things that you can only learn after getting a lot of experience, which takes a lot of time, and also putting in the work by backtesting, forward testing, and collecting data in this manner. Because even just taking trades from TradingView and putting them on my spreadsheet is a lot of work, but this is the work that you cannot avoid if you want to become consistently profitable in the markets. And so with this video, I hope that you can go and try and implement this on your trading strategy. It doesn't matter what your trading strategy is. You do not have to be trading the same way, but at least you should be able to know what your win rate is, what your maximum drawdown is, what your equity curve looks like, and what your return on investment at the end of the year looks like. Because if you do not know what your return on investment on average is at the end of the year, that is when you start getting in the market with very little capital and expecting to make millions or thousands of dollars in the market just from that small capital that you have. So once you are aware of all this, it will be very easy for you to take trades in the market without having the fear of making losses or having any expectations, which is the most important thing when it comes to trading. And with that said, I hope you've gotten a ton of value from this video. If you have any questions, leave them in the comment section, and kindly remember to subscribe and like the video. See you in the next one.